Hello and welcome to this Monday's weekly market briefing. We've got lots to talk about, but firstly, huge AI funding leads to hype and grifting, warns DeepMind's Demis Hassabis. As well as that, China's factory activity adds to signs of recovery. And finally, Saudi Arabia's Israel strategy upended by anger over the Gaza conflict. We've got lots to talk about on the charts also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is of course on this topic of AI and its relation to crypto. Now, according to the co-founder of DeepMind, Demis Hassabis, who has now said that the hype is obscuring the great deal of scientific progress within the field of AI. And this comes as a surge of new money flows into AI and has created a crypto-like hype around it. Now, of course, this is not the first time that we've spoken about AI and not the first time that we've spoken about crypto, but I think it probably is the first time that we've spoken about the two kind of in this more negative light where they're combined together. Ultimately, crypto, as we've spoken about before, has been driven greatly by the hype, just within the retail space around this idea of there being a decentralized currency, with it kind of being this gimmick of the new age, with those wanting to get in on it and kind of profit off it, kind of opening up their own Coinbase, their own Binance, their own what used to be FTX, and then ultimately trading crypto or investing in crypto with the hopes of kind of seeing it again somehow. And most certainly that has been seen by some in the field, but also we've of course seen a great deal of losses take place, and this is as a result of this great deal of hype that's kind of surrounded the topic of crypto and led to many getting involved and watching a massive bull run, but then when we see the hype go for a certain cryptocurrency or the cryptocurrency market as a whole, and then we see the kind of crash that follows. So most certainly I think crypto is seemingly kind of the hype around crypto is starting to emerge itself into the AI space, and that's what kind of Demis Hassabis is kind of warning here, with his kind of AI projects mainly focusing on the more scientific side of AI and the scientific progress which AI is kind of allowing for, and it's seemingly annoying him in some sense in regards to the way that that kind of crypto hype, which is kind of the unfounded hype, the hype just based on there being hype, he doesn't really like the way that kind of mentality is now slipping into the AI space, which of course is a very important space for the progress of humanity. So that's seemingly the kind of risks that are being highlighted here. But not only that, I think when we compare AI to crypto, I think it's a very important thing to do ultimately, because of course with crypto, as I've said before and I just mentioned, basically the great deal of hype also means that there's a great deal of kind of risk in the markets in relation to crypto, and as a result we've seen the hype whilst it has pushed cryptocurrencies to highs not seen ever before, with equities and that kind of thing, gains not seen before in traditional markets. Ultimately what we've also seen is extremely volatile markets and extremely significant sell-offs and Bitcoin crashes and other cryptocurrency crashes, ultimately as a result being driven by hype, and therefore people not kind of doing their due diligence on the matter, or ultimately not caring about doing their due diligence on the matter, because ultimately they just think that with this kind of hive mind, this kind of group mentality of hype, ultimately market's going to go higher, and so even if it doesn't make sense to buy, we can still make money out of it. And so seemingly that's kind of what Demis Hassabis is also kind of fearing of, as ultimately say AI, as we have seen recently, has driven this kind of equities boom with US equities making new all-time highs. What if that is kind of going to be an unstable kind of rush to the upside, ultimately because it's kind of driven by this crypto-like hype, which has seemingly entered the markets ever since the social media age has kind of begun. So I think, he is making some very important points here, and some points which are very important to kind of take home and analyze when we do look at, the AI market, for example, or at least, kind of markets and or stocks which kind of relate to the AI industry, such as Nvidia, or even the kind of big seven tech firms. So I think, this is a very interesting article to highlight, and a very interesting topic to kind of talk about and note down, as I think this is something that's going to continue be a kind of red light that's flashing within the AI industry. It's just whether, people actually kind of observe it and take it into account. Now, Hassabis did go on to tell the FT that billions of dollars are being poured into AI startups, and this is bringing about a great deal of hype and grifting, which is usually associated with crypto. As we, of course, all probably do know, with that hype within crypto, a great deal of grifting and kind of scams have also taken place, and lies and deceit, even within, one of the largest crypto exchanges, that being FTX, and that's kind of the worry that he's kind of putting out there for AI now. Now, Hassabis professed his worries that such a hype seen with crypto is now pouring into AI. He did caveat his statement on the hype, however, by saying that in some ways AI is not hyped up enough, but then in other senses it's too hyped. The hype around AI really took off following OpenAI's launch of ChatGPT back in November of 2022, which sparked an investor frenzy and caused other startups to begin racing to develop new generative AI technologies, with VC groups investing $42.5 billion into over 2,500 AI startup equity rounds last year. Now, the Magnificent Seven, with the likes of Alphabet, Microsoft, and Nvidia, have also been spearheading the so-called AI revolution, and as a result, global stock markets have been propelled to their strongest Q1 performance in 5 years. So kind of that's also adding to the kind of this worry that maybe the hype is creating this kind of AI bubble. Now, Hassabis pioneered DeepMind's AlphaFold model back in 2021, which helped to predict the structures of 200 million proteins, and is now used by 1 million biologists around the world. So a very interesting article to note here, and I think a very important kind of thing to keep your eyes on in regards to the AI industry, and relating that kind of crypto hype to the now AI boom that we're seeing. That's all to talk about in this article now. Next article to talk about is in regards to China and their factory output. Now, data now shows that Chinese factory activity has expanded for the first time in 6 months. This provides a positive sign for China's economy amidst a deep property slowdown. Now, this is a very, very interesting article to kind of note, as the kind of rhetoric that we've kind of been hearing around the Chinese economy and the articles that we've mainly been talking about on this channel in relation to China have kind of reinforced this very negative view of the Chinese economy. And this is primarily just based on the facts of the matter within China's economy at the moment. Ultimately, China's economy is one of these more new and developing economies where we'd be expecting higher levels of growth. But that said, as a result of the COVID lockdowns that we saw following the COVID pandemic, of course, and the resulting impact on kind of global markets and even China domestically, we've seen a massive slowdown within the factory sector and the manufacturing industry of China. Added to that, the property slowdown and the weakening investor confidence within China, we're ultimately seeing this kind of slowing growth within China, which would more so reflect a very well developed economy, which is also kind of experiencing some kind of slowdown. And as a result, we've seen China revise its economic targets, of course, to kind of 5%, which is the lowest in decades, I believe, and even then analysts are saying that this is an ambitious outlook. At the same time, we're seeing, geopolitical issues kind of add to trade issues between China and the US and the rest of the world, with humanitarian issues within the Xinjiang region impacting the very important car manufacturing industries based within China itself. So all of this is really affecting China's industry, and as a result, it's kind of been a very pessimistic view that we've kind of been talking about in regards to China and China's economy. That said, what this article is kind of providing us here is this more optimistic view on China's economy, which we've maybe been hearing from China, the second Chinese premier. I can't remember his exact name, pardon me, but ultimately, the second in command of China basically has been kind of repeatedly claiming that the Chinese economic outlook is very strong still, and this is what we're kind of hearing here from actual data. Now, the manufacturing purchasing managers index was 50.8 points in March and up from 49.1 in February, which makes it its highest figure in a year. The expansion in the manufacturing activity was supported by rising export orders. That said, the National Bureau of Statistics also said that further state support was needed for the industry in order to keep the Chinese economy hopeful, with companies ultimately suffering from insufficient market demand, which is furthering oversupplying worries. The figure does, however, add to the growing signs that the Chinese economy is now stabilizing, with the Chinese GDP growing 5.2% despite weak export revenue and property sales. That said, they also have set a 5% growth target for this year, which analysts worry is over optimistic, and if such a figure would be achieved, increased stimulus would be needed. So a very important article to kind of conclude on the China topic for today, and a very important one to kind of take into account with it providing that more optimistic picture. That's all to talk about in this article, though. Next article to talk about is more on the geopolitics issue, and a quick one that we're going to have to cover as we've been on the articles for quite some time now. Before the Israel-Hamas war, Saudi Arabia were trying to reach a deal to normalize relations with Israel. Since the beginning of Israel's offensive into Gaza, however, popular support for Palestine in Saudi Arabia has grown, and domestic pressure on the government has also grown. The Saudi government, however, now worry that a prolonged conflict in Gaza will restart the process of normalizing relations, which the Saudi officials have put great effort into. Now, Saudi Arabia's ambitious economic and social reform plans would also be greatly impacted by the prolonging of the conflict within Gaza. And now Saudi officials are being faced with the harsh reality that the images emerging from the war will radicalize their young population and make good relations between Saudi Arabia and Israel impossible. That said, it seems that the US is using the potential of Saudi Arabia normalizing diplomatic relations with Israel as the main incentive for a permanent ceasefire in Israel, with the good relations with Saudi Arabia being a long-term goal for Israel, since the nation is the Arab world's biggest economy and home to Islam's two holiest sites, with a deal being worked on before October the 7th, which would have provided Saudi Arabia with US nuclear technology in return for a normalization agreement between the two. So a very important article here to note in regards to geopolitics and world tensions, which of course is massively affecting markets such as oil and gold. So definitely keep your eyes on the topic of Saudi Arabia, and of course always the Israel-Hamas war. That's all to talk about on the articles, though. I think we've covered a lot here. Next to talk about, of course, is the charts, where we still have much to note for this week. Now, to begin with, of course, we are on US equities and US indices, more importantly talking about the US 30 though, of course, which is in a very interesting position to start off the week as we end off last, with price at that all-time high level and basically recent high level, where price is now seemingly reacting to that all-time high level and key area of liquidity in a very bearish manner, with price kind of wicking into that key area of liquidity and resistance, and closing its candles below that area, which kind of course would influence us to kind of take a more bearish outlook on the US 30. That said, of course, prices at these levels after coming into contact with the 50% Fibonacci retracement level we did mark out last week, along with that key liquidity zone, which represented those previous all-time highs, which we knew was going to be a key area of liquidity and bullish support for the US 30. And since then, price has risen from that level and is now kind of on the way to the upside. But as we did end off last week, it seems like price had reacted to this key liquidity level on Thursday and then Friday, and now we're kind of seeing that slowdown and bearish momentum as a result. That said, I've just realized, of course, last week, of course, we did not have the kind of usual Friday market briefing, ultimately because it was that kind of bank holiday, Easter kind of weekend, so we kind of didn't have that to talk about. And that's the same going into this week, but ultimately, of course, we still need to make our weekly market briefing to kind of have that weekly outlook. So ultimately, we didn't see that movement on Friday, pardon me, but on Thursday most certainly we did. And so the question is now whether, starting off this week, price will now continue to the downside after coming into contact with this liquidity level, or in fact price will now find its way to break above this liquidity zone, maybe break, hook, and then continue higher. So lots to look out for on the US 30. Next to talk about, though, is the dollar, which is kind of just consolidating around this key liquidity level. It's kind of hard to make a note of where price may now go on the dollar, just simply because it's stuck in this kind of area of liquidity and there's no clear direction, as the direction to the downside that was kind of very clear last week, not last week, but coming to the end of February and starting off March, has now of course been reversed, and now the month of March has kind of come back on itself to make a bullish candle to end off the month. So it's a hard image to kind of understand for the dollar. Ultimately, though, this week's NFP figure will be very important to understand where price may go for the dollar. As well as that, of course, we have Jerome Powell's speech, so that's also going to be adding to the way that price does move. So definitely listen out for both of those pieces of data or news, as they will be affecting the dollar greatly. Next to talk about, though, is Euro USD, which is now broken below this key area of liquidity that we noted as a very significant area, as price had made its way down to this liquidity level, acted as that level acted as a significant area of bullish liquidity. Price moved to the upside, but then reacted in a very bearish manner to that 38.20 and key liquidity zone, and since then price has sold off, broke below this key liquidity level, and now price is kind of hooking back on itself and reacting to this level once again. So we could definitely be looking at price now making its way down further to the downside. Next to talk about, though, is pound yen. Not much to say on pound yen. Price is consolidating, which is kind of uncommon for the way that price has been moving recently on pound yen. It's been reacting to these key liquidity levels quite interestingly. We're not getting much significant pound or yen data this week, so maybe you need to take that into account as well when looking at the charts, but not much is happening on pound yen apart from the fact that it's consolidating near these previous all-time highs. Next talk about, though, is on the cryptocurrency front, with Bitcoin, of course, which is arguably kind of in this ranging motion at the moment between kind of in this area just above this old area of liquidity that we noted as a significant area of bullish liquidity. Price did not break through that level. We did note that there was a chance that it did after coming into contact with this 78.60, and there still is that chance that price does move lower, simply on the account that price is struggling to break above that 78.60 Fibonacci retracement level. So I think that if price then does break below, pardon me for that voice crack, if price doesn't break below this area of liquidity, then of course we will have a run to the downside coming. That's all to talk about on Bitcoin, though. Next to talk about, though, is gold, which is moving in a crazy bullish fashion at the moment. Just look at the way price has moved over the recent months and weeks, with price just overwhelmingly pushing to the upside and continuing to make new highs as we enter the new week. So the question of how high will price now go is the key question to ask. That's all to talk about on gold, though. Next to talk about is, of course, oil, which is the last thing to note on the charts, which has broken out of this kind of bullish flag, if you could have even called it that. Price hadn't really formed a full flag at that point, so arguably it wasn't a flag, but yeah, price is now making its way to these highs and could most certainly break into the $88 a barrel territory, not seen of course since November of last year. So price is certainly on the upswing at the moment for oil, and we've got lots of upside opportunities of course to look out for. That's all to talk about on oil, though, and that's all to talk about on the charts as a whole. Next to talk about, of course, and lastly to talk about, of course, is the economic calendar, where we are getting some very significant data this week. Not lots, but some very significant data nonetheless. Firstly, we're getting the US manufacturing figure, followed by the German inflation rate figure, followed by that the Eurozone inflation rate figure. So two very important Eurozone inflation rate figures there, which will be definitely influencing the euro and other euro-related assets. Followed by that, we're getting the US services figure, as well as Jerome Powell's speech, so a very important piece of Fed rhetoric to listen out for. Followed by that, we're getting the ECB's monetary policy meeting accounts data, and then the Canadian balance of trade and unemployment figure. So very important Canadian figures there. But most importantly, to end off the week, we are getting the US NFP figure, and that will be most certainly influencing any US related assets or markets. So definitely keep your eyes on the economic calendar and particularly the NFP figure this week. We've covered lots in the articles, though, lots in the charts and lots in the economic calendar, but that's all from us at Wildwood Capital. Hope you have a great trading weekend. I hope you're having a great Easter. See you later. Bye.